This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at what's coming up on the show today. Top platinum miners in South Africa are now unable to pay suppliers. Africa's busiest city is on standstill. We'll take the pulse of Nigeria's commercial capital, Lagos. And the World Bank warns of a serious slump in East Asia and the Pacific due to the coronavirus pandemic. Well, let's kick off today's show in South Africa, where platinum producers Anglo-American Platinum, Sibanye Stillwater and Impala Platinum have now declared force majeure on their contracts. This comes after a 3-week national lockdown forced operations to close. Now, the government called for a shutdown in an attempt to tackle the spread of the coronavirus. South Africa's mining sector is facing a decline following the downgrade of the country's sovereign rating by Moody's agency. Processing has also reduced as ports were shut down, preventing the flow of commodities such as iron ore, coal and manganese. Well, Angelo Coppola joins us in Johannesburg with the latest on this. Good to see you, Angelo. Now, at least 3 platinum miners, as we mentioned, have declared force majeure now. Paint us a picture or a clear picture as to how this lockdown is impacting miners in the country and certainly how they're responding to it.
Well, look, the mining minister, Mantashe, apparently had a very solid set of talks with the Minerals Council of South Africa last week. They've agreed that the sector would maintain value-adding mineral infrastructure, and that's especially the refineries and smelters in the country. These can't be easily turned on and off because it takes huge amounts of electricity. These operations will continue to operate, but at reduced levels. Ores or lower levels of mining production will happen to feed those smelters. So it's not business as usual, but they will be maintaining health and safety standards when they're doing that mining for those ores. Of course, the coal suppliers to Eskom, of course, will continue at full steam for now, and that includes the entire Eskom value chain. So as it stands right now, Uche, it's business unusual, reduced levels, but it might pick up in 17-odd days' time. Uche?
Right. Well, Angelo, some analysts are actually pointing to the fact that this slowdown in production is good because it's offsetting the slowdown in demand that we're seeing globally. Already we're seeing platinum prices up about 20%. Gold continues to rise as well as a safe haven asset. So how are we seeing commodity prices impacted by this decision to implement a force majeure?
Well, look, it's all really about supply and demand, as you've said. And while there was an initial jump in some of those commodity prices, the lower demand manages those levels. So it's a bit like an elastic band. If you pull it, it stretches, and when you let it go, it kind of returns back to its original state. When we speak about gold, of course, that's traditionally been a safe haven asset for most asset managers, be they value, active or passive. What's happening right now, of course, is at another level. When the Chinese economy does start to come back on stream, so those prices are going to spike as commodity producers scramble to meet the new demand. The question, of course, is whether the producers, especially in Africa, will be able and be out of the corona woods and able to actually do any mining and meet that expected demand. Uche?
Well, on that note, Angelo, has South Africa's government set aside any form of stimulus measures, particularly for the mining sector?
Well, look, there's been some general relief measures put in place by government, SARS, SARB, and the other organizations for business in general in South Africa. On the mining front, we haven't heard anything specific just yet. There's talk, of course, of VAT deferments. The Reserve Bank is applying its quantitative easing in the South African way. But we have been told by the Reserve Bank that they may likely introduce other measures either later this week or early next week. So there's a possibility there, some are muting or suspecting of another rate cut. And so that hasn't been ruled out just yet. Government, of course, will want mining to be up and running as quickly as possible because they are a significant contributor to the government revenue in terms of VAT, taxes and royalties. And obviously we know that SARS needs the revenue, so mining is most likely to be the first industry sector to restart itself.
Well, Angela, I want to shift focus just slightly to South Africa's markets. Now, we do know the country just lost its last investment grade rating when we saw Moody's cutting it to Ba1 on Friday. We're hearing now that South Africa's government bonds are still seeing some good demand at the first junk status auction that it had. What's the latest on South Africa's markets?
Well, counterintuitively, demand still continues. I spoke to an executive at FTSE Russell who operate the government or the global government bond index. And they said last week twice that due to COVID-19, they're going to suspend the rebalancing of that world government bond index. And it would only happen at the end of April. So South Africa gets a month's breather. And that's good news. But as the CEO of the JSE told me, there will be some active managers who are going to be keen to get in on those high yields that are on offer from a sub-investment grade country like South Africa, because the global environment is really one of low interest rates. So there are going to be people looking at those bonds. So there is a little silver lining on that downgrade cloud. Uche?
Well, as always, good to see you, Angelo. Many thanks for your insights there. Angelo Coppola joining us in Johannesburg. Well, as Angelo just said, local and global markets, as well as several currencies, continue to react to the announcement by Moody's that, of course, South Africa has been downgraded to non-investment grade status. This comes at a time when the country is fighting off the COVID-19 pandemic with a 21-day national lockdown. Angelo takes that up.
To see what I don't want to.
South African Finance Minister Tito Mboweni says the downgrade couldn't have come at a worse time. Many agree with him.
I honestly am not particularly optimistic about South Africa's fiscal position because we know that tax collection is very weak and is going to be absolutely terrible for the time being. We are seeing all sorts of horror stories from around the economy about how everybody wants to declare force majeure on each other. And I am particularly concerned that corporates might start doing the same with regard to SARS.
The situation will be most apparent in the global bond markets, where passive asset managers investing to their mandates will have to get out of sub-investment grade countries like South Africa.
That said, I am excited about the possibility that the downgrade could be a catalyst for structural reform. And we have already seen some of our politicians and some of our policymakers leaning in.
One of the recommendations from the ratings agencies is for government to deal with the inefficient state-owned entities and cut its bloated public sector wage bill. This includes police officers and teachers.
And then right in the middle, we've got the real ham in the sandwich, which is our healthcare workers who are under, kind of dire risk of personal infection. So it's very tough to imagine that the government is going to wade into that environment and announce a whole lot of aggressive, financial cuts and wage cuts.
But there may be some good news when it comes to the rebalancing of the world global bond market. Due to the coronavirus, South Africa will not be removed from the index until the end of April. So passive managers will stay invested for another 30 days.
But I suspect that you may have active managers who are with more of a speculative view, who are likely to jump in and enjoy the very, very, very rich yields that they would be getting from a sub-investment grade rated bond.
Interestingly, the overwhelming news flow concerning the coronavirus has distracted investors' attention.
The translation directly into the markets is often blurred by a lot of the other noise that we're seeing coming out. And so government's response and government's actions around COVID and around stimulating the economy genuinely creates for us an opportunity for government to lean in and influence positively the response by investors towards this downgrade.
As the market, investors and traders digest the downgrade that happened a couple of days ago, it's still early days, and it's going to depend on how long we're in this coronavirus cycle before the government can actually start doing something about getting us back into investment grade. I'm Angelo Coppola for CGTN in Sandton, South Africa.
Well, let's head to Zimbabwe now. The country's government has reinstated the multi-currency regime. It also restored the peg that its local unit had to the US dollar and slashed lending rates in response to the economic impact of COVID-19. But the measures, which are a U-turn from policies implemented less than a year ago, may not have the desired positive impact. Here's CGTN's Farai Mwakutuya with the details.
Just weeks after claiming de-dollarization was on course, the central bank has made a dramatic about turn by allowing the use of the US dollar again.
This is actually a tacit admission by the government that the Zimbabwean dollar has had disastrous consequences on the local economy. It's another case of policy inconsistency. However, it's a welcome move for the local productive sector. We have been feeling the pinch of inflation.
The measure is seen as an attempt to mobilize foreign currency held outside the formal channels. Central bank reserves, which are drawn from export revenues, have been stripped down to a minimum due to COVID-19 induced disruptions. However, the reintroduction of a pegged exchange rate could militate against efforts to mop up the greenback and fuel further activity on the parallel market.
People do have US dollars. If you look at the informal sector and a lot of the SME sector, they do have the US dollars, but they will not go and buy at TM if the rate is going to be 1:25. If the rate was a market rate or people were allowed to set market rates, then the strategy can work in terms of mobilizing those US dollars.
What it effectively means is that we will have less liquidity on the interbank market because all the formal businesses that have been actually liquidating their foreign currency process on the interbank market see losses because you can be able to liquidate on the black market and gain more.
Critics argue it's futile for the central bank to try to set an exchange rate when it doesn't have the foreign currency reserves to back it up. The country's apex bank has also lowered its benchmark lending rate from 35% to 25% to try and stimulate more borrowing and thus activity in an economy that was already in distress before the coronavirus outbreak and which is now likely to see further decline after it. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Well, let's now take a look at our corporate headlines today. Kenya's National Treasury has allowed export processing zones to sell 100% of their produce in the local market. That's compared to 20% previously. Now, the move seeks to cushion the industry from losses which were inflicted by the global COVID-19 pandemic. The government will also pay the duties and taxes for 90 days for EPZ goods that were awaiting clearance. And South Africa's Sasol Holdings has lost an estimated 90% of its value following the ratings cut by Moody's. The firm is also expected to come under review for further downgrade. Now, Moody's earlier cut the rating to Ba2, having cut it to junk status in March. And Kenya Airways is seeking a multi-billion government bailout after it was forced to ground its aircraft. This follows the ban on international flights sparked by the coronavirus pandemic. The funding is expected to cater for maintenance of grounded planes, as well as payment of staff salaries and settlement of utility bills such as security, water, and electricity. And American Airlines is expected to seek $12 billion aimed at cushioning the impact of the coronavirus on the sector. Employees have been assured of no involuntary furloughs or cuts in pay rates or benefits for the next 6 months. Staff will also be offered enhanced voluntary leave and early retirement options. And that's a look at our corporate headlines. Well, we are heading into a short break now, still to come on the show. Africa's busiest city is on standstill. We take the pulse of Nigeria's commercial capital, Lagos. And the Central Bank of Egypt restricts cash withdrawals and deposits.
The world economy as we know it is about to change. Global Business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo.
Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back. Well, let's head to Nigeria now, where the African Genomics Research Services and Development Company has launched a fund to tackle the current challenges surrounding the testing for COVID-19. Now, so far, it has raised about $350,000 from partners, including banks such as Union Bank. The money raised will help increase COVID-19 testing capacity in the country by up to 1,000 additional tests a day. It will also be used to buy biosafety materials and personal protective equipment, which is needed to keep frontline healthcare workers safe. Well, let's find out more about this project from Deji Badmus. He joins us now in Lagos. Deji, always good to have you on the show with us. Now, give us a sense of Nigeria's current testing capacity and, of course, how this project will transform or potentially transform this.
Well, at the moment, Uche, Nigeria's testing capacity is just around 2,000. That's according to the Minister of Health, that on a daily basis, at least 2,000 persons are tested for COVID-19. We actually have in this country at the moment 6 testing facilities. What the government says it wants to do is to scale that up to ensure that almost every state in the country has the facility to test for COVID-19. And other than 54 gene, I mean, we've seen the very wealthy in this country, people like Dangote, Africa's richest man, and a couple of wealthy individuals in this country come out to support, contribute generously now in support of the fight against the coronavirus. So the government is receiving hefty and generous donations from individuals, and the government says, including the NCDC, of course, says it's going to use the funds now to scale, to ensure that at least there's a testing facility now in most of the states across the country. Now, for 54 gene, the whole idea is to increase the capacity to test, at least so that the country will be able to test, say, around 5,000 persons a day. We expect that by this time, some deployment ought to have been made, but other than what 54 gene now is doing, we are seeing enormous support as well come from public-spirited individuals. I'm talking about the wealthy in this country, Uche.
Well, Deji, I mean, testing up to 5,000 people per day, that's a feat for most countries around the world right now. So how soon will we see 54 gene be able to deploy the funding and suddenly get the testing equipment to the necessary institutions in Nigeria?
Well, the expectation is that by now 54 gene ought to have started deploying, because there isn't much time at all. I mean, this is a disease that is spreading so very fast, and how quickly you deploy could actually make the difference. So I think some deployment has happened, but definitely would need confirmation from 54 Gin. And I think it's just because some deployment has actually happened. That's the reason why the government says in the coming days, not even weeks now, that we're going to see more testing laboratories now spring up in a couple of states. Now, other than that, state governments too on their own are doing quite a lot to ensure that they get these molecular laboratories now that could actually test for COVID-19. So that deployment ought to have happened. I don't think 54 Gin would wait until all the money comes in. It's not as if it's got a target. That's a particular amount it says it is going to get to. So I think that deployment ought to have started happening, because you also know, Uche, that at this time, it's actually also difficult to buy some of these equipment we're talking about, because almost every country needs them. So they've become very scarce, very, very scarce. So, so whatever you get, whatever you're able to lay your hands on, you just want to deploy to the field as soon as possible. So that deployment, I think, would have happened, even though not all of them. You know, maybe as they get them now, they would deploy them to the field, yes.
Okay, well, when we look at the funds that are being poured into a project like this, they donated 150,000. They secured additional funding of 350,000 from partners, including banks in Nigeria, such as Union Bank. How much more do you think they're expecting? How much funding are we seeing being poured into projects such as this right now? Give me an estimation.
Well, it's actually difficult to give you an estimate, but I would think that they'll be looking at something massive. I mean, imagine, they, for instance, they contributed $150 million. Union Bank and, of course, other partners contributed 350. That brings everything up to $500 million. Now, that's actually huge. And the expectation is that more donations now and support would come from other bodies now and other partners. There is a possibility that they might be looking at $1 billion. It's not impossible. And if they're able to raise, $500 million within a very short time, then there's a possibility that they could hit the $1 billion mark. But the issue is that I'm not very sure that they'll wait to hit, say, the $1 billion mark, for instance, before they start deploying. Because, look, this outbreak is spreading fast. The Nigerian government is trying to do everything possible to stop this disease from spreading, and that's the reason why we have the lockdown in the country. So whatever comes in now would definitely be deployed immediately. These equipment, not easy to get. PPE, for instance, the testing kits, we understand they're quite scarce. You don't just buy them off the market. Every country needs them. So I think as the money is coming in, they would obviously be deploying them. But it's not impossible that these guys might be targeting this $1 billion mark now. But I'm not very sure they're going to wait until they get to that mark before they start spending the money, as in deploying to get the resources and the equipment now they need to provide to all these hospitals that they said they are going to provide to, so that Nigeria can actually improve its testing capacity.
All right. Well, many thanks for that update, Deji. Of course, that's Deji Badmus joining us there in Lagos. Well, let's stay in Nigeria, where President Muhammadu Buhari's announcement imposing a 14-day lockdown has now triggered a last-minute rush in the West African nation. The lockdown, which has been imposed on the country's busiest cities, Lagos and Abuja, has brought concerns on whether the country can provide food, water and basic necessities to its residents. Here's CGTN's Terry Wangari reporting.
Lagos is home to at least 20 million people. It's also the epicenter of Nigeria's coronavirus outbreak, with 111 confirmed cases so far. And while the 14-day lockdown may limit the spread of the disease, residents in the city are already struggling.
So it's not easy at all. Even to buy 1 week food is not easy, talk less of 2 weeks. And we have 3 kids. And we still have our grandma that is living with us. So it's not easy at all, because the money to use to buy it, even we don't have it now.
While President Muhammadu Buhari ordered movement to cease, he allowed food retailers, medical facilities and some other businesses to remain open.
I am directing the cessation of all movements in Lagos and the FCT for an initial period of 14 days with effect from 11 p.m. on Monday, 30th March 2020. This restriction will also apply to Ogun State due to its close proximity to Lagos and the high traffic between the two states. All citizens in these areas are to stay in their homes. Travel to or from other states should be postponed. All businesses and offices within these locations should be fully closed.
Buhari's decree has left people from various backgrounds confused. Banks became a casualty of the uncertainty as throngs of people filled branches around the city to withdraw as much cash as possible before the start of the lockdown. It's not the coronavirus that has sparked people's worries about survival, but having enough food and water to get by.
We came to buy beans. Everything is expensive. Rice, beans, cassava, grain, and palm oil are all expensive, even onions. Only God can help us.
Another issue now is power. I have to be running generator of 2,000 fuel every day just to sustain that thing. How much is my salary?
As of March 31st, the Africa Centers for Disease Control and Prevention has registered 3,243 COVID-19 positive cases across 45 African countries. This is a sharp infection curve compared with only 105 infections reported in 10 African countries in the 10th of March. Terry Wangari, CGTN.
And in Egypt, the central bank has issued new regulations restricting cash withdrawals and deposits in all banks. Now, starting Sunday, the daily cash withdrawal and deposit limits for individuals has been capped at $640 and about $3,200 for corporations. Now, the bank has also cited fears of COVID-19 spreading as the reason for this decision. But of course, many think there are different reasons. Here's CGTN's Adel El Marhoui with more.
The governor of the Central Bank of Egypt, Tarek Amir, says the temporary cap set over cash deposits and withdrawals is to discipline the cash flow. During the past 3 weeks, Egyptians have withdrawn nearly $2 billion from banks, an alarming figure according to Amir. CBE has also cited fears of COVID-19 infections through banks.
The central bank is concerned about the virus's spread through paper banknotes. The CBE also says this restriction would limit the flow of individuals to banks. Some are seeing it as a right decision in the wrong time. Definitely, bank clients must have been given a buffer period. The CBE was flexible to provide some exceptions, but I still don't understand the cap enforced on deposits.
On the contrary, long queues at many banks could be seen following the announcement. For individuals, a cap for deposits and withdrawals have been set to just around $640, while ATM transactions are half that amount. Corporations are restricted to only $3,200, with exceptions given to payrolls payment and check deposits.
Definitely, there are unannounced reasons for the decision, one of which could be to control expected spikes in inflation. Food and nutrition products represent a significant portion of the inflation basket. These restrictions lead to limiting unnecessary buying and therefore control prices of some goods.
The Central Bank of Egypt has not announced any time frame for this cash cap. No further restrictions have been announced over non-cash transactions. The CBE's announcement follows an earlier decision to cut rates by 300 points, a move that aimed to revive the business environment in Egypt. With its cash flow restrictions, the CBE has provided stimulus to the market with one hand and took it back with the other. Adel Mahroui, CGTN, Cairo.
Meanwhile, South Africa's Reserve Bank has launched a bond buying program to help the struggling economy. The move will provide some liquidity into its financial market. The economy is currently in a recession that's likely to be prolonged with the spread of COVID-19. CGTN Sumitra Naidu reports.
The spread of COVID-19 is having a severe impact on the economy and has prompted the South African Reserve Bank to intervene.
The mandate of the Reserve Bank, however, does include ensuring the smooth functioning of the South African financial markets. And we saw a situation where the foreign selling of South African bonds had been so extreme in such a short period that it had actually gummed up the system and effectively used up the balance sheet capacity of the market makers. This was creating an unsustainable dislocation within the financial markets, and it made complete sense for the Reserve Bank to step in just to remedy or to address this dislocation.
The bank announced this week that it started a program to buy government bonds.
Basically, is what you call open market operation, where the bank, to supply liquidity, it secures bonds, thereby supply cash into the financial system, ensuring that there's enough liquidity for banks to try and sustain also their own intervention, supplying individuals, supporting businesses in this crisis.
Buying bonds can be a risky move. Foreigners can sell off their SA government bonds and pull out their money. A program like this could also see a sell-off in the currency.
The bid-offer spread on bonds was 100 basis points wide. Today it's only 5 basis points wide. From that perspective, I think it has been a highly successful intervention from the Reserve Bank.
The Reserve Bank has never liked intervening in the currency or financial markets, but most economists agree this was a good move considering the current circumstances.
The Reserve Bank's decision to implement quantitative easing is quite welcome. The injections of liquidity into the money markets and buying of government bonds in the secondary markets should help to inject liquidity, particularly into the banking system.
This is very, very comprehensive by government, and we believe that post the crisis, we won't be as worse off as we'll be had we not intervened.
With South Africa now officially on lockdown, all businesses have had to stop their operations and will remain closed for 3 weeks. Only essential services like food retailers, pharmacies and medical facilities will be allowed to operate. These must-have measures will have a serious impact on business and the overall economy going forward. Samitra Nadu, CGTN, Johannesburg, South Africa.
And to Somalia, authorities there have announced a ban on local and international flights to curb the spread of the coronavirus. CGTN's Abdulaziz Bilo has more from Mogadishu.
A contractor with the United Nations mission in Somalia is the latest person to test positive for coronavirus. The country now has 3 laboratory-confirmed positive cases of COVID-19. Somalia has now suspended all local flights as a health measure to limit the potential spread of the virus. The move is expected to affect hundreds of passengers and create huge losses to both airline and cargo companies.
We have had an important discussion with the House Committees on Social Affairs. One of the recommendations we have given is a complete halt to international and local flights to avoid the spread of coronavirus. Securing our border is essential in containing this threat.
Insecurity and poor infrastructure in most parts of the country means people rely on air transport as the safest means of movement. All 3 positive cases have been confirmed in Mogadishu. The latest victim, a foreigner, is said to have transited in COVID-19 hotspots. The country's president, Mohamed Abdullahi Farmajo, is now calling on increased awareness to educate the public on dangers of the global pandemic.
We have confirmation of 3 cases in Somalia so far. We pray for all the 3 patients to recover from the disease. It's important to note that prevention is better than cure. Hygiene and social distancing is important to ensure the virus doesn't spread.
Mogadishu has 1 functioning quarantine facility but lacks vital equipment. Regional health officials are in the country's capital to strategize on ways to boost preparedness. A recent aid shipment from China is also expected to go a long way in boosting the safety of medical personnel who previously lacked vital safety equipment to handle suspected cases. Somalia is one of the least affected countries compared to its neighbors that have a higher number, including 1 death recorded so far in Kenya. And with a weak health system, experts call for increased awareness in the country to ensure that the virus doesn't spread. Abdulaziz Bilo, CGTN, Mogadishu, Somalia.
And in Côte d'Ivoire, authorities in the capital, Abidjan, have closed the city's largest market for cleanup in order to help stop the spread of the coronavirus. Hygiene workers have been disinfecting Adjamé Market. The managers there say the shutdown was necessary to potentially save lives because of the number of people who work in the market or buy produce there every day. Now, traders have nowhere to sell and have set up outside the premises in order to sell their remaining produce.
The mayor gave us the order to move the women vendors because of the coronavirus. Because when it starts spreading within the population, it is dangerous. So that's why the mayor decided to move all the women from the market.
We are trying to figure things out because we have produce in stock. So that's why, because they close now, we have to sell outside the market in order to manage before we don't have any more produce. Otherwise, we understand the president's message. We are ready to stay at home. We are happy and proud of the confinement decision.
It's a threat that we can't see. It's invisible. You know there are always a lot of people in the market, and if 2 or 3 or 4 people are infected, everyone else will be. You see what it can do, huge damage. We don't want it to be that way. We decided quickly to take measures. We closed and we are washing the market.
You are watching Global Business Africa. Let's take a short break now. Still to come. The World Bank warns of a serious slump in East Asia and the Pacific due to the coronavirus pandemic. And fears of a deep recession mount in the United Kingdom.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Economic data out of the country. The country's foreign currency reserves.
With a dedicated and diverse team of anchors, CGTN now brings Africa to the palm of your hand.
I'm Perina Karibe in the heart of Nairobi, which is bustling.
From everyday heroes to the continent's most powerful figures, we bring their voices to you.
We haven't changed.
And this is something most of us are very excited about.
We bring you news that's changing perspectives.
I'm Uche Okoronkwo reporting from Nairobi City Center.
News that brings Africa to the world. CGTN. See the difference.
Welcome back. Now, the World Bank has warned that the coronavirus will sharply curtail growth in developing East Asia and the Pacific regions. Now, the multilateral lender warns precise growth forecasts are difficult given the rapidly changing situation. The World Bank's baseline predicts growth in developing economies to slow to 2.1% in 2020 and to a 0.5% contraction in a worse-off scenario. That is compared to an estimated growth of 5.8% in 2019. Now, the World Bank also says countries in the region should invest in healthcare capacity and take targeted fiscal measures, including subsidies for sick pay and healthcare, in order to help mitigate some of the immediate impact of the pandemic. And the United Kingdom has confirmed more than 22,000 cases, with the death toll at over 1,400. While authorities there say social distancing measures are making a difference, concerns are that the economy could enter its deepest recession since the 2008 financial crisis. Here's Andrew Wilson reporting from Oxford.
The UK economy took another hit as airline EasyJet announced it was grounding its entire fleet for at least 2 months. With over half of its 9,000 staff now stood down for that period, final flights became emotional moments on board.
I'd just like to say thank you. You have been a great crowd to have on board today. And now if I could ask you all to give yourselves, the crew and the flight deck one last clap and cheer. Thank you.
Cabin crew from EasyJet and other airlines are already being invited to retrain as support staff for the emergency hospitals being converted in the UK's major cities. The London centre should open this week with 500 beds, rising soon to 4,000. Inside Downing Street, the Prime Minister has been running cabinet meetings from self-isolation, and his special advisor Dominic Cummings is now said to have tested positive for coronavirus. But there are plenty of ministers and experts to continue the daily briefings.
So I think 3 weeks for review, 2 or 3 months to see whether we've really squashed it, but about 3 to 6 months ideally, and lots of uncertainty in that.
The priorities remain testing and safety equipment for medics on the front lines. A new respirator shown here in trials produced by a Mercedes Formula One University College London joint venture has been approved for use in the UK.
I sincerely think it may actually save many lives by preventing patients from needing to go onto a ventilator and again saving that vital resource for the very, very severely ill.
But on testing for the virus, the signals remain mixed. This car park south of London is seeing more business, but the UK is still falling short of targets without a clear explanation from the government. In Peru, British tourists line up to be shipped home on 2 charter flights organised by the Foreign Office from the capital Lima. Thousands of holidaymakers were trapped after the country closed down hotels, restaurants and the international airport. The UK lockdown may be essential for the nation's health, but the economic picture is getting bleaker. One forecaster is now predicting a 15% contraction in GDP in 2020's second quarter, the deepest recession since the financial crisis. Given the measures, however, this is hardly a surprise, and the public advice remains the same, for people to stay at home. Andrew Wilson, CGTN, Oxford, UK.
Meanwhile, the global slump in demand from the COVID-19 outbreak has weighed on China's exporters. We're taking a look today at the country's textile and garment sector, where many of these sectors' overseas clients have had to delay or even cancel their orders due to the coronavirus. CGTN's Wule finds out how Chinese exporters are adjusting to remain competitive after COVID-19.
Lots of our European customers are telling us that they want to delay the shipments.
95%都出口于伊朗，订单有40-50%已经取消了。
March and April used to be a busy season for these garment manufacturers and exporters from Shaoxing City in South China's Zhejiang province. But no longer, after business was adversely affected in recent days, after the effects of COVID-19 were felt in more countries and regions.
In February, when our overseas client didn't feel the effects of the pandemic, they asked when we could resume production and ship the goods. But since last week, many of them want to delay or even cancel orders.
Hu Zuling has been making and exporting garments for over 12 years. He said he has never seen such a crisis, which he felt was even worse than the 2008 financial crisis and the 2003 SARS outbreak. To help exporters, many Chinese banks have lowered lending rates, but some say more further measures are needed.
We hope there can be more tax and rental reductions, which can relieve some of our operational pressure.
Official data showed that exports had fallen by 17.2% in January and February, compared to the same period a year earlier. Apart from turning to national administrative and monetary measures, exporters also realized that they need to explore new growth areas by themselves. Many Chinese exporters say it is hard to predict when the overseas market will recover. But in the meantime, what they can do to brace themselves for the worst is to adjust their product manufacturing and market strategies. Many companies have not only reduced their productions and designs, They've also conducted trainings to explore more domestic and other emerging markets.
During this time, we can do some training work to our sales team and to develop some new market. And also we are doing domestic market.
We used to develop new styles, but now we have to suspend or lower costs. We will also expand our domestic markets.
While other businesses try to discover new growth areas, Hu Zuling has chosen to purchase machines to produce face masks, which are in huge demand around the world.
Besides exploring domestic markets, I want to turn the face mask manufacturing into a new part of my business, which can help to stabilize the company's operations.
Many Chinese exporters are likely to suffer if the pandemic cannot be effectively contained. A Chinese proverb says there's an opportunity in every crisis. The opportunity in this crisis lies in their quick reaction and their ability to meet market demand. Wu Lei, CGTN, Shaoxing City in Zhejiang Province.
Now, it has been about 2 weeks since the U.S. state of Nevada decided to close all non-essential businesses, including the Las Vegas casinos at the heart of the state's economy. Our reporter Ediz Tiansan shows us what the city looks like now.
Very few people you see on the streets of Las Vegas these days are all locals who've come out to see what their city's turned into.
All of a sudden I'm like, wow, I need to go out and start taking pictures because Las Vegas has never been closed down ever since it opened. And even with 9/11, it didn't close. The casinos were still open.
It's been nearly 2 weeks since the governor of Nevada issued a 30-day order for everyone to stay at home.
We're out bike riding our bikes today just because we are getting a little bored at home. And you're the first people we actually met so far riding up Vegas Boulevard.
The closure of all non-essential businesses, including casinos, restaurants and bars, has effectively brought an end to tourism. The majority of resorts have shut down indefinitely. The few hotels that remained open are mostly accommodating flight crews and rare business travelers, with most facilities out of service and most employees laid off.
Well, I work for a restaurant downtown, which closed pretty early into the quarantines. It's been pretty tough. We just don't know when we're going to be able to reopen.
Las Vegas has already been hit hard by the statewide closures, and the one common concern among all Las Vegans is the uncertainty regarding the duration of these restrictions. But one thing they all agree on is that the more people abide by these restrictions, the sooner they can get back to business. Others in the service sector are worried about potentially longer-term impacts of these closures.
We live off of tourists, and since there's nothing everything's gonna go down. I'm saying there's a lot of companies that they're gonna be in bankruptcy for sure. It's gonna take a long time to recover.
Normally, nighttime is when the so-called Sin City comes alive. But these days, bright lights are only revealing how empty its streets have become. The famous casinos of Las Vegas and the big entertainment production events, they are all closed down. Nothing is happening in town, and locals are worried because nobody knows when things can get back to normal. As the nightlife has come to a temporary end, ironically, its streets are hosting more people in the daytime. Mostly locals who are yearning for some fresh air outdoors, and those who still can't believe how the face of their city's been changed by this pandemic. It is Tianshan, CGTN, Las Vegas.
Meanwhile, in Germany, the total COVID-19 cases are now approaching 67,000, with over 640 deaths. CGTN's Natalie Carney is in Munich with a closer look at how businesses in Europe's largest economy are heading increasingly online to survive.
A quarter of the world's population, roughly 2 billion people, are in some form of lockdown. Germany has imposed a strict ban on gatherings of more than 2 people, making it difficult for some businesses to operate, but many are finding ways around this. Jack Walds is conducting his first online virtual yoga class.
A lot of dance studios, yoga studios, educations have very quickly come into a predicament. Online technology is a very good solution under the circumstances.
Offering the classes online allows the studio to continue its membership program and keep up the payments for its operating costs.
Through this removal of personal contact, perhaps it is a stepping stone for people who have inhibitions. They can remain unseen and unheard, and leads to the traditional physical contact.
Virtual yoga classes are all part of a growing trend that's seeing businesses stay afloat and healthy by moving online. All over the world, people are finding unique ways to use the internet to stay connected.
Funerals, schools, zoos, the arts, even demonstrations have become virtual.
Welcome. This is the first online winemakers dinner, I think, ever, which is fantastic.
Faye Cardwell, an event planner, created Quaranvino, online dinner dates to respond to the increasing need for social events. Roughly 50 wine lovers from across Europe are taking part in the inaugural dinner.
People have signed up, they've received the wines that have been shipped to them directly at their house. I've sent them some recipes, and tonight they'll be tuning in to a Zoom call so that we'll be talking with the winemaker who's going to explain all about the wines and the region and the cuisine.
In so doing, Faye is also helping vineyards in northern Italy.
It's a great opportunity to share the wine in so many different regions and places. So I think this is a way to get more in contact with the people who drink the wine.
As businesses forge new ways of operating, and as the wine flows between these virtual dinner companions, the conversation takes an optimistic tone.
It's a great chance to experiment, and then there's things that, when we finally get out of this crisis, that will carry on in the future.
Life is never going to be the same ever again. So, this is a first try, I think, for anywhere in terms of wine tasting. And I think, it's the way to go forward.
I think this is really going to be a change for the world in general. We're more distant, but we're actually closer in a certain way.
Natalie Carney for CGTN in Munich.
Well, let us shift focus now. Take a look at how commodity markets performed today. Oil prices firmed up, with Brent crude up over 4% in trading today. That's after U.S. President Donald Trump and Russia's Vladimir Putin agreed to talks aimed at stabilizing energy markets. Now, other benchmarks climbed off 18-year lows today on the news, but traders are saying, though the futures market is seeing a recovery, physical cargoes are still selling oil at hefty discounts. That, of course, reflects the differences between the realities on the ground and, of course, speculation about efforts to ease the pressure in the oil market. Now, gold prices were down today as the dollar firmed up and, of course, as shares rose on hopes of a rebound in China's economic activity. But that safe haven demand has kept the metal on track for its sixth straight quarterly gain. Well, let's take a quick break now. Still to come. A Nigerian startup strives to train SMEs in the country on expanding their businesses. Isaac? For the past 4 years, a startup academy in Nigeria has been teaching entrepreneurs how to build sustainable businesses. And beyond structural support and business education, its Xenia has been training them on how to access government loans in order to expand their businesses. Here's CGTN's Deji Badmus with this story.
A typical session for young entrepreneurs underway at the Xenia Startup Academy. They're taking through all the rudiments of starting a business and sustaining it. Short for Xenia Startup Academy trains about 10 entrepreneurs at a time, 4 times a year, fortifying them with all they need to be successful. Founded by a Swede and franchised in Nigeria in 2016, Xenia is a backbone for quite a number of startups in Nigeria, helping them to develop and grow their business.
People had good ideas, but they had very bad structures or foundations. And we felt with the proper coaching and training, we would have better businesses that would have the right foundation to grow.
Ngak says Itsinya was essentially founded to fix the projection that 70% of businesses are bound to fail. So they've been providing entrepreneurship education to business founders in Nigeria, introducing them to an ecosystem of other innovative minds with access to business development experts and coaches. But beyond providing help for business structures, Itsinya also teaches entrepreneurs how to access the Central Bank of Nigeria's loans to enable them scale.
The CBN is partnering with Itsinya through the NISAL Microfinance Bank to train entrepreneurs who are planning to get loan from the microfinance bank to grow their SMEs. Itsinya gives them foundational training to help them understand how to use these loans and what to use them for, and also to help them build capacity that would enable them pay back the loan to the bank.
You can never have.
Zachary Fakir is a fish farmer. He's been at Itsinya Startup Academy for about 3 months now. He says with all he's learnt here, he's ready to hit the ground running.
I know exactly what to do from 1 naira to 50 million naira now with what I've learned here. So basically, I'm ready. Once I get the loan, I will know how to apply and how to get to the last and also get results and also pay back.
In the past 4 years, Itsinya has trained over 180 entrepreneurs, mainly from the north of the country. They're aiming to help even more by building a larger hub to include incubator, accelerator, and business support services. Deji Badmos, CGTN, Abuja, Nigeria.
Well, before we go, let's take a quick look at how Africa's currencies performed today. South Africa's rand opening weaker, hovering at around 18 rand per dollar. Now, traders say the effects of Moody's downgrade of the country's credit to junk added to the pressure already on emerging market currencies. With employment and trade figures due late today, traders are saying that the rand could be reaching, or rather reacting to signs of a further economic slowdown. Kenya's shilling slightly stable today due to commercial banks and some multinational companies offloading those dollars to fund their activities. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.